Good morning, ladies and gentlemen. Welcome to the INNOVADERMA PLC full-year results for the year ended 30th of June. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Simply type your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Joe Bayer, Chairman of INNOVADERMA PLC. Good morning, Joe. Joe, it looks like you've just put yourself on mute there. If you can just unmute yourself, please. Joe, if you can just unmute yourself, please, and then we'll be able to hear you. Just bear with me, please, investors, while we just get Joe back on the line. Thank you. Joe, if you could just go back a stage and click on your audio options just to come back in. I'll give you a quick call just to pull you through, if you could bear with us. Thank you.
Ladies and gentlemen, just while Joe does reconnect to the platform, just to say that a copy of this presentation and a copy and a recording for this presentation, and along with the published Q&A, will be made available to you via your Investor Meet Company dashboard. You will receive an email notification telling you when that is ready. Thank you very much indeed. Just by way of just a few housekeeping points, just throughout this presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab, which is situated on the right-hand corner of your screen. If you look at the top of the bar, there is a Q&A tab. If you select that and type your message in the bottom and then press send. The company might not be able to answer every question it receives during the meeting itself. However, the company will review all questions that are submitted today. But as I say, Joe is now just dialing through. He should be with us in literally a couple of moments. Apologies for the inconvenience to you.
Hello there.
Hi, Joe. Thank you very much indeed, sir. Sorry, you're back with us. Yes. Introductions have been made, and if I could hand over to you for your presentation, sir. Thank you very much indeed.
Good. Thank you very much, and apologies for the slight disruptions. Good morning, everyone. Welcome to our full-year results call. I am Joe Bayer. I'm Executive Chairman of INNOVADERMA. With me on the call is Warren Dockery, our CFO. And also in attendance is Rodney Turner and Ross Andrews, my fellow directors. Let me start by saying that I hope you, your friends and your family are safe and well. Before we get into the presentation, I want to recognise the efforts of all our people during this really challenging time. I want to thank our teams for keeping the business running so effectively during all the change and volatility. It really has been a fantastic team effort. Thanks to all our customers for their loyalty, and to our suppliers for playing their part in keeping us open for business. I would also like to thank our shareholders for your continued commitment to our business. This has been undoubtedly one of the most challenging and unpredictable periods of business life we could have experienced. The uncertainty of what comes next has made decision-making almost impossible. The timing for us and for our business and so many other companies was just so wrong. However, it was real and we had to react with leadership and focus. Alongside updating you on our full year results today, I'll be sharing how we've responded to the pandemic. As a business which sells our brands through retail stores and online, we've had to respond pretty quickly to mobilise our strategy and to our other established online channels, and I'm pleased to report that the company has been resilient despite an unprecedented trading environment, which really meant our bricks and mortar retail channels only contributed to a fraction of our revenue this year. Turning to the presentation, those that are new in the business, just a quick summary of where we started. Originally, the business was founded in early 2013. It acquired the Skinny Tan brand in 2015. We went to list on the London Stock Exchange in 2016. We did acquire the small brand of Charles & Lee and Prolong during 2017. 2018 was a year which we entered boots with Skinny Tan, and it was the first signs of our business becoming something of a quantifiable substance. Obviously, our growth in D2C was important to our business and has been the platform under which we've built our brands. And of course, this current year is the year that we're going to talk about. As we announced this morning, our business was resilient in terms of having a multi-channel strategy and diversified brand portfolio. Our revenue was up 3% on the previous year, and it was a result which we were quite pleased that we could hold our brands out in the marketplace. However, the profit was significantly impacted by higher advertising online costs, lower margins from the competitive nature of competing online, and the pandemic-driven retail closures. Continued popularity for Skinny Tan, our customer list globally grew by 48% to close to 900,000. The launch of Nothing was important for us, launching into 800 Superdrug stores. However, was impeded by the fact that we launched, had the pipe fill order, but the actual physical launch was basically delayed due to the pandemic. So we have placing in 800 Superdrug stores, but no real product launch for us. We released 23 new products, which was a lot of the work that we did in the first half of the year. I think moving forward, we're looking to review the main impacts of the COVID environment. That was the crowding of the beauty space by bricks and mortar businesses wanting to play in the online marketplace, therefore bidding up pricing on attracting customers and also forcing us to compete heavily in those markets. Our new year has had a positive start. We're up 3% for the 3 months ending September versus last year, and it is in line with our expectations at this stage. I guess the key things for our response to COVID-19 was really protecting our stakeholders. Priority of all of our team being safe, healthy, and well-being, continuing to deliver uninterrupted services to our business, and also continuing our new product development and therefore protecting the brands that we have. We did move quickly to an agile working environment. We introduced obviously new technologies to communicate, and during this period the team was well supported. Our resilient business model, as I've mentioned, multi-channel strategy, D2C and bricks and mortar. We have a variety of brands in different regions. And of course, I guess the most important thing for us was to protect our cash. Our key brands, Skinny Tan, obviously, is our key brand. It dominates our portfolio. We'll talk a little bit more about that, but by segment, Skinny Tan accounts for about 86% of our revenue. We do have growing brands. Roots is at 7%. Nothing started in its first year of being 2% of our sales, and Charles & Lee being 2% of our brands. All these brands are undergoing great growth. But of course, Skinny Tan is where we focused a lot of our attention in terms of product development and expanding into different channels. Charles & Lee has been an impressive brand, mainly a gifting proposition. We're actually just launching the brand online in the UK and in the US. Roots, our premium hair care brand, is undergoing a significant revamp in formulation, packaging and presentation, and is well positioned in our retail channels. And of course, the new brand Nothing, which we developed in-house to disrupt the hair removal category and appeal to a demographic that we believe existing brands in that category don't do. Just a small mention on our life science products, Prolong. It is the world's only FDA-cleared medical device for the indication of premature ejaculation. It's a brand that we are lucky to have patents in 72 countries, and we're slowly working through the regulatory approvals to sell in a variety of countries. We can, of course, sell in the US and Australia at the moment, New Zealand and a couple of other smaller markets. However, the big key markets of the Middle East, Asia and Europe are undergoing work to actually gain approvals we require to sell. Quickly mentioning Growlace. Growlace is a developed helmet for the rejuvenation of hair, FDA cleared product. We are developing a newer, more upgraded product, which has been delayed through the regulatory approvals required by the pandemic and Brexit, but it's something which we're working on, and we'll see something in that space in the next year. One of the key areas that we've really worked on hard is sustainability. And when we look at sustainability, it really is about pushing through and then coming up with ways in which we can service the marketplace. Look at our strategic aims. Innovation is at the heart of our business. New products, new categories, agile development. We have a small team, but a very creative team. We'll continue to innovate. We'll continue to develop new products, and already we have a number of new products that we are looking to launch at the latter half of this first half and early into the second half of this financial year. Expansion is important. As we've just announced, we've appointed a US distributor who will distribute all of our products and will also manage the Amazon channel. Continue to focus on our customers and harness our relationships. Currently spending time and effort within the business to enhance the customer journey through the direct-to-consumer channel. Sustainability, as I mentioned, is an important aspect of our business, creating a positive social impact. Diversification in our brands, products, both organically and accretive acquisitions, is on our radar and something which we'd like to be able to do to grow the business. And obviously, from our perspective, the key area that we need to focus on is restoring profitability to our pre-pandemic levels and, of course, generating shareholder value. Full year results, as I mentioned, total revenue was up 3%. Gross margins down 800 basis points, primarily as a result of aggressive bundling to be able to compete in the marketplace. Adjusted EBITDA down. We recorded a small 0.3 million loss, primarily driven by the higher advertising costs that we had to spend to keep the products foremost on the D2C channel. And cash and equivalents, 2 million at the end of last year, 1.2 million at the end of FY20. We did make every attempt to preserve cash and be quite frugal in what we do. In terms of the business growing over the last 5 years, we really have focused on delivering compound average growth in our top line, and at 32%, we believe we've built a very good platform. If we look at the growing retail footprint, store numbers, The big movers this year has been Priceline with 474 stores. We've actually launched Nothing, as announced earlier this week, into Priceline, and Priceline also carries the brands Charles & Lee and Skinny Tan. We've also expanded Charles & Lee significantly into Myer and David Jones in Australia, which has been a great effort. And of course, we had the rollout into Boots and the Tesco stores, which has been a great effort from the UK team. And then, of course, Nothing being rolled out into Superdrug's 800 plus stores. Our D2C platform, 60% of our sales, is an engine for our growth. It not only represents our brands in a very fast-moving digital world, but it also provides brand presence for our retail customers. And quite often, a lot of the retail advertising for Boots and Superdrug is done via this channel. It's important because it is where everyone is at the moment. And we use a number of partners, Facebook, Instagram, Google, AdRoll, and a lot of e-tailers. We've been using artificial intelligence to enhance return on investment. We've had the AI system sitting in the background learning how our D2C channel operates, and we'll be progressively moving to using AI in a lot more aggressive fashion. The business maintains a high GDPR vigilance and compliance. We have a large database. We're very careful as to how we use the database, particularly in the UK where the regulations are very firm. We continue to grow transaction volumes and average order values. And of course, our customer base grew 48% in the last 12 months. Full year contribution of Nothing. If we look at the outlook, it's important to recognise that Nothing was pipe-filled last financial year. And of course, we're looking to pick up the launch activity that we had planned to support revenue growth. As I said, we have a strong pipeline of MPD and topical brands for rollout in the end of the first half and in early second half in readiness for the peak season. First regions for regulatory approval for Prolong, Korea and Hong Kong, and then we'll roll out more regulatory approvals, particularly in the UK and Europe. As I mentioned, a distributor has been important for the Americas, which will enhance our ability to diversify revenue streams geographically. Also mentioned a review of our D2C marketing spend, which we really want to work on to improve our returns and bring us back into pre-COVID environment. We believe as a board that we're positioned with the right strategy, and I think we have the financial strength to weather any uncertainty and deliver further growth. The conditions in both retail and D2C to an extent still remain challenging, but it is positive. And as I said, we're trading for the 3 months ending September at 3% up on the same period last year.
It's fantastic. Thank you very much, Joe, there for perhaps we could just move on to some of the Q&A, Joe, if that's okay. I'll just run through and just remind investors they can please do continue to submit your questions via the Q&A tab on the right-hand side of the screen. Simply type your question and press send. But perhaps just while Joe takes a minute to review the questions that we've already had in, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, will be available on the platform for you to review. And lastly, before I hand back to Joe, your feedback is important to the company. So immediately after the presentation has ended, you will be redirected for the opportunity to provide that feedback so the company better understands your views and expectations. Joe, perhaps before looking at the questions that are coming during the live event, perhaps we could go to some of the pre-submitted questions, if I can ask you some of those, please.
Yes, I can refer to some of those. There's a duplicated question here, but does the business have adequate cash reserves? It's a question that's always asked. As I mentioned, we We manage our cash tightly. We need to ensure that we have relationships with our suppliers and that we have adequate cash to meet any commitments that we have to. I can say that we have adequate cash to enable us to continue our business and to plan for the future. We've already done a lot of the product development on roots. We do have some new products coming out. As I mentioned, money's already been spent on that. So from our perspective, we believe that we are positioned to be able to navigate our way through this pretty challenging and uncertain time. I have another question here where it's been asked whether there are any significant or any other significant personnel changes. No, there's no significant personnel changes. We've had one person leave who was involved in our digital channel marketing area, but we have people in our business, and that responsibility has now moved to another person who has similar experience. So there have been no other personnel changes. I have another question here as to how D2C is tracking. Our D2C business, compared to the 3 months last year, is slightly down, and it's a bit of a consequence of people moving back into retail as retail stores have opened. So our total D2C channel is down about 6% for the 3 months. However, our retail channel is up 13%. So when you look at that, the actual brand itself is pretty well in line to where we were the same 3 months last year. There's quite a lot of movement between retail and D2C, and the retailers for the first 3 months of this financial year were looking to make up quite a bit of ground in terms of their lost sales in the category that they experienced for the last 4 months of last financial year. So there was some pretty strong promotional activity happening in retail, hence the stronger growth in retail, which moves people out of the D2C channel into retail. We make a very strong point of not going head to head with retail when the retailers are promoting strongly. We tend to back off a bit on D2C. And if retailers are off promotion with our products, we would tend to go a lot harder on D2C. There's another question here I see is that what is the strategy for life sciences, as nothing seems to be happening? Well, to the contrary, we're actually working pretty hard on regulatory approvals. It's one thing to have the patents. It's another thing to be able to sell product online in the US and in Australia, but to get regulatory approval in some of the other big markets, which is where we think the biggest opportunity is, does take time. And particularly with the lockdown and the effects of the pandemic, the 6 months accessibility to regulatory bodies has been very limited. And in case of applying for a CE mark for Europe and for the UK, a lot of the major providers of that service are not accepting any new business. So we fortunately have been able to position our application into a process that is being managed by somebody that is capable of doing that for us. But the key thing here is that it's the regulatory approvals to be able to sell. It's one thing to have the patent and the product, but you've got to be able to sell, and medical devices do take time. We expect that we'll see some good activity in Prolong as we get the approvals coming through for Korea and Hong Kong. The CE mark will enable us to sell in the Middle East. We already have discussions occurring with distributors for the Eastern European countries. So I think that there will be some more activity happening there. There's another question, I think it's coming out in our results, but someone asked the question, how much was capitalised in respect of customer lists in the FY20 result? We capitalised £870,000, which is much lower than what we have done in the past. We are looking at that every year in terms of the valuations, the impairments. Our customer list now is circa 900,000 people, of which there is a very strong proportion of those subscribed. So it's an essential marketing tool that we use in terms of generating growth in the SkinnyCam brand through the D2C channel. I think there's another question just come through. How do Boots and Superdrug sales compare to this time last year? I think clearly they have been very active in the first 3 months of this financial year, and as I mentioned, they're about 12% up on the same 3 months of last year. I think that the questions that I've got off.
I think it covers off the pre-submitted questions, Joe. We have had a few questions as well come in during the event. Perhaps we could just click on that Q&A tab and just have I think some of which you've pretty much covered off with the pre-submitted, but perhaps if you could just have a little scan down and see if there's any others that you
Sure.
can answer, that'd be fantastic. Thank you.
Okay, so there's a question here regarding the ownership of SkinnyCam PLC, and that we are at 95.5%. What's the plan? The remainder? Is the owner looking to sell down further each year? The minority holder is Louise Ferguson, who is an employee of ours. Louise runs our D2C platforms in the US and Australia. Louise, under the terms of the shareholder agreement, Louise can offer her shares to us at any time. We do have an agreed method of calculating the brand. We last did a formal brand valuation about 12 months ago, and we come to an agreement of what we pay Louise for what she would like to sell down. Progressively, Louise hasn't made it clear to us she wants to sell everything down, but we do have conversations with her, and where we believe it's in the best interests of both parties, then we progress with that purchase and her sell down. But she's invested in our business and works hard. As I said, she's an employee and is driven by the success of the brand. Just looking down, there was another question about the sufficient cash position, which I have already answered. Further question, looking at the breakdown, some good results, Australia, US. The expectations for these markets, noting US went from 600 to 1.6. Correct. Is this mostly D2C? Yes, it is D2C. We actually had a very good period of direct-to-consumer sales in the US. It does undergo a bit of a seasonal characteristic, so we're able to drive good D2C sales. Our customer base in the United States grew from approximately 50,000 to close to 100,000. So the activity was very strong there. The distributor agreement that we have just signed is purely for retail and for Amazon. So we'll be running the D2C platform ourselves, as we will be with the television shopping networks. In Australia, any plans New Zealand? We do have a distributor in New Zealand. Smaller market, but we do get repeat orders, and the product is carried in the two major pharmacy groups. Also, given the lockdown in Victoria, how has this played for orders coming in now for pre-Christmas period? Victoria is a big impact, 25% of the Australian GDP. It is also the home of Priceline, so there's probably a good 100+ stores that aren't operating at the optimum level. Fortunately, the larger Priceline stores also carry a dispensary, so they are open and people are shopping quite freely there. But the restrictions in Victoria go further than just pharmacy. It means people are not moving anywhere, going anywhere, so that is an impact. We will expect to get a second order for our Charles and Lee gift packs in October, And as the restrictions are easing in Victoria, we think that's well timed. I have a question here regarding the expectations on gross margin for the year and what we've experienced in the first 3 months. Our gross margins obviously suffered through pretty aggressive bundling propositions. I can report our gross margins have improved. We would expect to pick up a substantial portion of those gross margins that we had to give away last year. It's always a bit about product mix as well. If we go more retail, then our gross margins will stabilise at somewhere the midpoint of where we were last year to this year, where we can actually become more profitable and our return on investment increases. Then our gross margins on our D2C channel, our gross margins will go up. How Charles & Lee launching the UK gone and why hasn't this been announced to the market is a significant product launch. We have launched Charles & Lee online only at this stage. We are still in discussions with major retail, high street retailers as to the launching of Charles & Lee retail. I wouldn't say it's a significant product launch. It's gone online. There'll be some marketing that will be undertaken over the next 3 weeks that we've committed to, but the board didn't think that it was substantial enough to actually go out as an RNS or as RNS reach. There's another question here, our expectations for the US business this year. Sales grew last year. Can this be continued? Obviously, US distributor comes on stream. There'll be some competitive pressure between direct-to-consumer sales in the US and a distributor who is selling through retail. It's an environment that we'll have to manage. It's an environment that we'll have to manage as we do in the UK, where we have a very strong retail relationship and a very strong D2C platform. So it is something which we experience in the UK and we'll have to do the same in the US. But we would certainly like to see us grow strongly in the US. It's a big market. It's a really strong consumer-led market. So we'd like to think we can continue that. There's another question here. Can we talk about the Nothing Superdrug exclusivity? When does this expire? And are you in discussions with other retailers? When we went to launch Nothing, we took it to the major retailers, and we were of the opinion that an exclusive arrangement where a retailer can focus on your product would be the best outcome for Nothing, because it was a brand that came from nowhere. It was going to compete against 3 strong players in the market, and you needed the full attention of the retailer. Superdrug and Boots were both initially very excited. Superdrug continued their excitement. To be honest, Superdrug were really keen to launch quickly, and they were very keen to roll it out into all of their stores. So from our point of view, that made it, I think, a little bit more tempting for us to go with Superdrug. It is a 12-month agreement, and we'll review after 12 months. This is not dissimilar to what we did with Skinny Tan when we launched Skinny Tan retail in the UK. We were exclusive with Superdrug for 3 years. For at least one of those years, Boots were very keen to bring us on board, but we honoured our agreement with Superdrug. Now, I think by doing that, Skinny Tan has benefited from the point of view that we can now give Superdrug certain products exclusively, and we can have those open products sold both through Superdrug and Boots. So I think it's pretty well the same strategy, and we have a great relationship with Superdrug. So we're very pleased that that's the case.
Joe, thank you. I think you've pretty much covered every single question that we've had through, just in case there's any other last-minute ones that are coming through. As I say, just having a quick scan through your answers. I think you have. You've been very generous with your answers as well, and thank you very much for that. The company will review all questions submitted today, so if there are any more questions to come through, and those will be published on the Investor Meet Company platform as and when the company get a moment just to answer them. Joe, perhaps I could just ask you just to wrap up before I redirect investors for feedback, please.
Great, thank you very much. Well, as I said, it concludes the presentation. Thank you very much for those shareholders that came on board and had a listen. This is a different and a new way of doing it. Bit of a shame we couldn't get video up, but I'm sure that we'll have more opportunities to talk about our business with our shareholders. Just like to thank everyone for taking the time to come on board. Again, to our team who managed the business so very well through these difficult times. To everyone else that supports our business, we are confident about our growth prospects, and these are enormously challenging times. Sitting in our seats here, you just don't know what's going to happen next, but I'm sure that we're going to come out of this stronger. So thanks again. I hope it was useful. It was different, but I hope that everyone got something out of this, and look forward to speaking to everyone soon.
That's great, Joe. Thank you very much for updating investors today. Can I ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback. If you've accessed this meeting via a website, that will appear in front of you a couple of seconds after the end of the webinar. If you've accessed via the link in the email, you'll be asked to log in to submit your feedback. It takes just a couple of seconds, and it's greatly appreciated by the company. So on behalf of INNOVADERMA PLC, I'd like to thank you again, Joe. Thank you very much for attending today's presentation. That concludes today's meeting. Good morning.